Good afternoon, everybody, and welcome to the next webinar in the Monday Market Matters series here for ActivTrades. It's fabulous to have you all here with us today. You're all very, very welcome. Here we are, 10th of October 2022. My name's Paul, and today we're going to be talking about the inside bar pattern as part of the educational element of the Monday Market Matters webinar series. We appreciate here at ActivTrades that we have a broad range of experience of people joining us. You're all very, very welcome, from complete beginners to people who've been trading for a good while. There'll be something here for everybody. We also recognize that we have a truly global audience, and that wherever you're joining us from in the world, we hope that you're well. We hope that you are enjoying these interesting markets, and we appreciate you taking the time to join us for our sessions. What's on the agenda today for our session, ladies and gentlemen? Because we're just, starting this new webinar series, will be a little bit of an introduction to Monday Market Matters and what we'll be focusing on. And as part of the education, we'll be talking about what is an inside bar pattern, more of which later. We'll talk about a little bit about how do we identify good setups, and we'll talk about, how to use simple tactics to build a trading plan. And then what we'll do is we'll switch across to the live market as we sort of transition across to the opening of the US markets. And what we'll actually do is we'll actually also have a little look and see whether there's anything of particular setups that we can see that we're talking about based upon what we've discussed during our session. So be sure to stay with us to the very end, because I appreciate that whilst we can talk about educational elements, it's always the most useful when we can sort of see them where they are setting up in live markets. For those who don't know me, my name's Paul. I've traded for many years, traded for funds and for clients. Primarily, I like to focus on trading FX indices and commodities. And for my longer term trading, I tend to be a trend trader. And my shorter term trader, I tend to be a reversion or reversal trader, both of which are actually very applicable to our main educational element today. So, as the slide says, welcome to Monday Market Matters. And today we're going to continue our new regular webinar series, Monday Market Matters. And the aim is to help traders start the week in the right frame of mind as we prepare for the opening of the US markets on Monday afternoon for here across in Europe, or for Monday morning if you're joining us from on the other side of the Atlantic. Each week at 2 p.m. London time, each session what we'll do is we'll talk a little bit about the major news to be aware of for the week ahead, so we're primed. We'll do a good bit on education, and the whole idea being that we just want to share ideas and thoughts and help you build your own trading knowledge. And we'll also take a look at some of the tools available to you as an ActivTrades client. We'll look at the varied ActivTrades platforms, and in various sessions, we'll look at specific tools that are available to you as a client of ActivTrades. And then what we'll do is, as always, we'll switch across to the live market as we start going into the US session, so we can have a little look at, see how the market is setting up, see what we're expecting, and also start to see whether there's, particular areas of interest that might be useful for us to know as we go into the sort of first US trading session of the week. So that's what we'll do. As I said, it's going to be a mixture of news, education, tools, markets, and each week it'll be a little bit of an emphasis on one more than the other based upon what we're seeing going on in the markets, and also just being able to sort of filter through feedback from yourselves. So if there are particular topics that you'd like us to see us cover, or there's particular subjects you'd like to see me sort of talk about, you'll find that we very willingly sort of accept feedback or any thoughts or comments. So you can either put them in the chat box here, or you can contact ActivTrades, the English desk, which will have the contact details at the end of the session, and they'll be very happy to help guide you and also to help take your particular feedback. So, it's always important when you start the trading week, regardless of what you trade, regardless of even what session you trade, or regardless of even what time frame you trade, it's important to have an understanding of the economic calendar, and it's an understanding of what news is coming out that week, all of which will be new data into the market, which will be also help to effectively change markets, to move markets, to induce volatility, or to remove it. For new traders, I appreciate that sometimes that can be a little bit overwhelming. Sometimes it can be a little bit intimidating because of the amount of news that is constantly flowing into markets. What I always suggest to new traders is, I don't expect new traders to necessarily understand the news, but I do expect you to know when the news is coming out. And that is important because invariably what you don't want to do is you don't want to find yourself sort of stepping in front of a freight train, which is what sometimes it can feel like if invariably you're trying to trade a position just in front of a big news announcement. So it's important that you have an understanding of the economic calendar and recognize when particular news elements are coming out. You will find that there are many economic calendars out there that you can utilize. There's even one on the ActivTrades platform, which you'll be able to find, and maybe I'll try and show you later. But what you'll also receive, okay, as ActivTrades clients, and I heartily suggest that you sign up for them, is that you'll get a little email at the start of each week just giving you a little bit of insight into what news is coming up. It's just a little bit of a heads up that they provide to clients, which I can heartily recommend. And it just allows you to just basically be primed and ready for what's coming this week. So, today, as it says there, we've got Fed's Brainard due to speak, okay, later on. Well, what will be later on this afternoon for ourselves. And actually what we find is that there's a considerable amount of data coming out this week. Not only is there what we would term formal data, namely formal economic news data, but we'll also have some of the central bankers speaking, and in particular, certainly here in the UK, we have the governor of the Bank of England, Mr. Bailey. He is due to speak tomorrow, and invariably based on what we've seen happening there in basically the sterling markets and invariably the FTSE, people will be very interested to hear what he has to say. There's also some UK news that's coming out on the Wednesday 12th, and as I said, that will be of a particular interest. But what we'll also be very interested in is on Thursday is where we start to see the CPI information from both the US and Germany, but in particular the US, because invariably that will be an indication of whether the US Federal Reserve have managed to effectively start to get inflation under control within the US. And of course, that has a knock-on impact to when, how often, and how large we see in terms of interest rises from the Federal Reserve in the United States. So you will find that an awful lot of traders will be very keenly aware of that particular news and glued to their screens on that particular session just to see A, what the news is, and B, more importantly for us as traders, is to see how does the market react. And then on Friday, we can see we've got some Chinese data coming out as well, which will, of course, have knock-on impacts into sort of, things like the commodity dollar currencies, especially things like the Aussie dollar, etc., but also generally in terms of understanding the overall sentiment of the Chinese market. So, as I said, it's a very busy news week ahead. There's lots coming out there, okay? And as I said, if you're a completely new trader, and I appreciate a lot of the people joining us might well be, I don't expect you to fully understand every little bit of the economic calendar or the financial data, but it is important for you to know when that news is coming out, okay? You want to make sure that you're effectively, not, as I said, not stepping in front of a freight train, because those kind of big numbers, they have the opportunity to induce volatility in markets, and really it's just you want to be forewarned as forearmed, so to speak. Having had a little bit of look at news, let's have a talk about education. And I do recognise that, as I said, we've got traders from all sort of levels of experience here. And I want to just share with you little simple ideas, concepts, thoughts, ways of operating that will actually help you become the best trader that you possibly can be. And that's certainly my aim, okay? And that's certainly, ActivTrades aims is that we want to be able to educate you so that you're in a position to make better trading choices when you're sat down to trade. So the inside bar is a very simple pattern to be able to recognize and understand, and is a good starting place, certainly for new traders, but even for intermediate traders, as a simple way to sort of build a simple trading plan. As the slide says there, an inside bar is formed when the high and the low of the bar is fully within the range of the preceding bar. Sometimes you might hear the preceding bar referred to as a mother bar or a kangaroo bar. I'm not entirely fussed how you particularly label it. What is more important to me is that you can recognize what it is. How I normally sort of try to describe it is that I want you to think of it like an organism breathing. And I personally would believe the market to be an organism that is breathing. And like yourself as a human, we know that as humans, we tend to surge, then we rest, then we surge again. And that's the way we operate, okay? And in trading terms, the inside bar is the rest. What we're expecting is the market has surged, It compresses as it rests, and then what we're ready to do is we want to prepare to catch the next surge. That's what we're looking to do. We want to be able to position ourselves to be able to do that. So it's quite simple, really, and I those of you who know me, those of you will have heard me talk over the years, is that I know that's what I particularly like. Simple concepts that are easy to understand, easy to recognize, and are applicable regardless of what instruments you trade, regardless of what time frame you trade. I will show you a few examples as we go through our session here. And I don't care whether you trade 5-minute charts on the euro dollar, or whether you trade monthly charts on gold, or whether you're a 1-hour chart trader on Bitcoin, okay? Regardless of the instrument, regardless of the time frame, good, simple setups that can be basically identified across time frames, across instruments, are at the basis of a good trading sort of a toolbox, shall we say, toolbox that you can take and utilize and build upon for new traders. Very often we find, and I have to say, men in particular, we kind of like to overcomplicate things. And I have been guilty of that myself, ladies and gentlemen. I am very happy to, put my hand up and own that. And sometimes we try and overcomplicate that. And we certainly do when we look to trade financial markets. But actually, what we want are simple concepts that we can just execute flawlessly time after time after time after time. That is actually what will help you become the best trader you possibly can be. And so within that, the inside bar is a very, very simple way to start. So we've got a few examples here. Let's get the old drawing tool up here, because I just want to make sure that completely understand. And what we can see here is that, remember what I was saying, okay? The inside bar, it has to fit within the absolute range of the preceding bar, and hopefully you can see that. And as I said, I'm not really fussed about what shape is the inside bar to begin with. That might change as you get a little bit of experience, but we're not entirely fussed about what the shape of the inside bar is. It's the important thing is that it fits within. Okay, within the preceding bar, whether you want to call it the mother bar, the kangaroo bar. This one is not an inside bar. And why is that? That's because actually the wicks, the high of that particular candle, traded higher than the high of the previous candle. Okay, some people like to just basically just sort of identify candles off the main body of the candlestick. That is not me. For me, that does not count as an inside bar. An inside bar, very simply, very clearly, has to fit within the range, within the high and the low of the previous candle. And that's simplicity is also one of its many strengths. The fact that it is either there or it is not. There is no ambiguity. The bar either fits within the range of the preceding bar or it does not. Simple as that. Simple as that. And I think that actually that simplicity is, as I say, a little bit of a form of strength. So there's lots of examples here. I just pulled up just an example of a simple chart. Okay, nothing really particularly different. I didn't even want to put on what the instrument was or what the time frame was, because actually it doesn't really matter. Okay, an inside bar is an inside bar. We can see we have one here. Okay, it's a bullish inside bar. We can see if we go further down, price pulls back, puts in an inside bar. The range is within the preceding bar. Price comes down, it goes sideways, it puts in another inside bar. Price moves down, puts in another inside bar, which also looks like a rejection candle. Before price comes down, it reverses, and even on its way up. Okay, we can see that there is an inside bar there. Some people would say that as like a bullish pin bar, a bullish rejection candle. Remember what I was saying, at this particular point, I don't really care too much about the shape or the size of the inside bar. What is important is that it is within the range of the preceding bar. That's the important thing. Okay, if you've not got that piece correct, everything else is kind of is a moot point anyway. Now, with experience and with knowledge and with understanding of how markets move, what you might start to see is particular inside bar appeal to you a great deal more because the price action is telling you a story. What I always tell traders is the market is always communicating with you. The market is always communicating with you. It's your job to learn to read that language, to understand that language. And with a bit, and the way you do that is with a bit of experience. Okay, by just practice and practice until it basically starts to click. And of course, with anything, the kind of the more you practice it, the quicker it kind of clicks. So when it comes to trading inside bar patterns, they can be traded as either a continuation pattern or as a reversal pattern. And you'll find that many people will trade them as both. What I would suggest, though, is if we look to trade them as a pure reversal, then it should be at the end of a trend with a particular level of support resistance as part of a confluence of events. And that is a line that, as we go through these particular sessions, you're going to particularly start to hear me sort of talk about a great deal. Confluence of events. And what does that mean, you might be saying? For me, a confluence of events within trading is where we start to see 2, 3, 4 things all coming together at one time and place. That gives you a higher indication that price may move in one particular direction over another, and that is enough for us to basically build a trade plan to actually sort of initiate a trade. But what we'll be talking about is, we'll be talking today about candlesticks in terms of both continuations and reversals, but I'm just sharing a little bit of experience, okay, of my own personal experience, namely that if you want to trade them as pure reversals, then it should be at the end of a trend at a particular level of support resistance, okay, which might be a horizontal level of support resistance, maybe it's a trend line, maybe it's dynamic like a moving average, maybe it's a big round number like parity on the euro dollar, etc. But it's that confluence of events, and we'll talk more about that as we go deeper into the session. So what we have here is a bit of an example here, okay? And you'll find I'm just trying to use lots of different examples, different time frames, okay? This is actually the Kiwi dollar against Japanese yen on the weekly chart. And actually, hopefully what you can see here is having price rally very, very strongly here. It hit this green moving average on my chart is the 200 period moving average. And what we had was a reversal pattern here. We had a double top. Not only that double top, we actually had a reversal. Okay, we had a reversal inside bar there. So we've had a double top at the 200 period moving average with a bearish inside bar. And remember what I was saying, a confluence of events, okay? There's effectively 3 things that have come together at one particular time and place that give us an indication that that is a suitable place for us to trade a particular reversal. And actually, hopefully you can see that over the next couple of months, that price actually dropped beautifully. And it was actually the opportunity to take a fabulous trade. But then what happens is we come to the red moving average, which you'll learn is the 50 period moving average on my charts. I tend to have very simple charts, a blue 20 period moving average, a red 50 and a green 200. And what do we see here? Well, actually, we've had a trend. We're at the 50 period moving average. And what we do is we also print a very small bullish green inside bar. Okay, that inside bar forms at the 50 period moving average after a long weekly trend. And what actually happens is that is the end of the trend, isn't it? We see it rally up a little bit, come back down, but then we see it fly up further. And that's what we're looking at. If, as I said, inside bars can be used as a pure reversal pattern. But if you wish to do that, my suggestion, okay, is that you utilize it as part of a confluence of events. You don't utilize it on its own, you utilize it with 2, 3, 4, 5 things coming together that will give you an indication that is the most likely, let's say, route of trajectory of price. And that's what I have found. And as I said, I'm just sharing my own experiences over the years of basically looking at and trading simple patterns like these. Whilst an inside bar can be traded in either continuations or reversals, we tend to sort of prefer to trade them as part of pullbacks in an existing trend. Okay, that is what I've tended to find that basically works the very best for inside bars. And if you think about it, that actually it makes quite a bit of sense because what we see is that in a trend we have a surge, then we have the pullback, which the pullback is the rest, and the inside bar is part of that rest before we get the next surge, and that's what we're looking to take part in. So what I suggest is for most people is that if you're having weekly and daily setups for inside bars, you could use the 4 hours to execute and manage, which we'll look at in a moment. What question you might want to take into account, okay, is decide on your entry on the break of the bar or the break of the range based on the size of the mother bar. And I will explain that a little bit more as we sort of look at some good sort of opportunities in a few slides time. And what I'm just meaning by that is, well, what we can see here, and as I explained, is that it's a question of does someone enter at the break of the inside bar or at the particular break of the low of the mother bar. Now, what we'll do is we'll look at that a little bit more in depth in a couple of slides time and explain it, but I just want to sort of set the tone, so to speak, ladies and gentlemen, all right, and just start to get you thinking about, how and ways we can particularly work to trade this. And also, to be pretty much with any sort of trading, beware of false breakouts. And once again, as I said, we'll have a little look at those and try and understand them and what we can do to actually help ourselves with them. So, as we said, inside bars tend to work best in trending markets. They're often continuation signals, and when forming at support and resistance levels, they can act as a stalling or as a stopping signal. Remember what I was just saying there. We like to see a particular confluence of events. In this particular here, just on this chart here, price has clearly been in a downtrend. We know there's the surge. Price pulls back. Price pulls back a couple of candles, and then what does it do? It has a rest. Okay, it puts in the rest. Think about that rest. Okay, just think about what's gone on to creating that bar. Is the market, the volatility has decreased. Okay, the market is resting. And what we're looking to do is position ourselves to basically to catch the next surge. That's what we're looking at. That's where we're looking to go. Surge, rest, surge. Keep it simple, ladies and gentlemen. As I say, humans and men in particular, we tend to overcomplicate things. We don't need to. We can keep it nice and simple. Pullbacks in trends that end with inside bars are very simple, good ways to be able to sort of trade trends. So here's an example here. There's a euro yen on the daily chart. And what we can see is quite clearly the price is beneath the moving averages. Price is in a very clear downtrend there. Okay, that was the surge. And then what actually happened? Well, we can see price sort of started to trickle its way up. Price started to move its way up here. We came to basically the 20-period moving average. We also basically very clearly showed up as a flag pattern, which is a continuation pattern. And that was ended by what we had here, which was an inside bar. Okay, an inside bar. And see, as it says, how the inside bar forms at the end of the pullback, the flag in a downtrend up against the moving average. That confluence of events, there's 2, 3, 4 things coming together at one time and place to give us an indication if that's what we're particularly looking to do. And what I was just saying is about having to decide where would we particularly like to enter? Where would we enter? So, of course, what we might be looking is, you might be looking, well, actually, you enter on the break of the inside bar. Other people might say, well, actually, I want to enter on the break of the mother bar. Okay, now part of that is to do with a little bit of the distance here between those two. There's an element of truth in terms of recognizing that naturally we want a small trade risk on our bar, and we would prefer that to be able to trade the break of the inside bar. But sometimes, okay, when both the low, in particular for shorts, when lows of the inside bar and the mother bar are close together, it can just be a bit of a sensible way to sort of wait for the break of the mother bar. Part of that is to do with also your own particular risk profile. Very aggressive traders, let me just clear this so we can draw it here a little. Very aggressive traders may well trade the break of the inside bar with their stop loss above the high. Other people might particularly trade the break of the inside bar with their stop above the high of the mother bar. Other people might actually like and wait for the break, okay, of the mother bar with the stop above the mother bar. As I said, part of that is to do with your own particular risk profile. And one of the things that is a useful tool for traders is to understand your own risk profile. We all sit there, we all have a tolerance to risk. Some people are very aggressive with risk, very comfortable with risk. Other people are very avoidant of risk. What I can suggest after years of trading and coaching thousands of traders is that it is important to know what your own risk profile is. Trying to trade another person's risk profile is generally challenging. It's about knowing who you are. And the best way to do that is, as you take every trade, take a screenshot of the trade, keep a journal of the trade, write down how you felt during the trade, and understand when you start to see the trends and patterns within your own trading decisions, because that will give you fantastic insight into your own risk profile. And I assure you that will help you enormously in terms of getting clear on your own particular trading style and your own particular trading plan. So here's another example. This is a weekly chart, okay, and price has been in a downtrend, not a particularly pretty one, a very scruffy one, I would suggest. But price bounces off support, comes back to the 20-period moving average, and then what happens is we print a very small inside bar at the end of the pullback against the 20 period moving average. Once again, what we'll be looking at here is just erase the drawing to start again, is how you have the opportunity on a weekly chart to effectively trade the break of the inside bar, and with your stop either above the inside bar or above the high of the mother bar, once again depending upon your particular risk profile, before we see price goes down for several weeks. What actually happens at it? Well, we start to see the end of it when it's printing small bullish inside bars, but there you go. That's what we'll look at a little bit later. Another good example here on the dollar against the Japanese yen here. Price is beneath the moving averages. It's moving in a very nice trend. What we actually see here is price, that trend ends on what? It ends on an inside bar, but price actually flows back. And this is a very, very nice pullback. It's a very clear flag pattern. We know a flag pattern is a continuation pattern. And what happens is we hit the 20 period moving average. And what do? Well, we print an inside bar at the end of the pullback against the 20 period moving average. Confluence of events. Inside bar at the 20 period moving average in a pullback, in a clear trend. That's what we're looking for. Remember, that's what we're looking to see and understand. And that is where our favorite and ideal trading opportunities lie. So, that is our preferred way to trade them in trends as part of a pullback. Okay, that is preferred. But as I said, they can work in continuations, they can work in reversals, they can also work in true breakouts as well. And they can be useful to know. And so, as I said, the inside bar, it is very simple, but actually can make up the part of a good, simple trading plan, even just being able to trade inside bars. And I know many traders who will literally just trade inside bars. That's their particular way and style of trading. Hence why, we share these very simple but sound, strong concepts with you, so you can take them away, start to understand them and utilize them in your own trading. When it comes to breakouts, what we're looking for is wait for the breakout to occur, then wait for an inside bar to be printed, and then trade that in the direction of the breakout. Okay, quite simple. In this particular case, I've drawn on the lines here and the levels because price had been in a range going sideways, nothing new there. But what actually happened is we saw price break out of this particular level. It broke out and it closed beneath that level, which gives me confidence. And then the next candle, what is it? Well, it's a little bit of an inside bar. Okay, it's an inside bar, and this is also an indication sometimes of what we see as maybe a false breakout, is that actually we can see that price in the next candle actually sort of went above the high of that inside bar, okay, before it reversed, it faked, and then actually sort of moved its way down beneath the low. Remember, what we're saying is we're trading in the direction of that breakout. So once we've seen a bearish breakout, that is the surge, the inside bar is the rest. We are looking for the surge, the next surge, okay? Remember, surge, rest, surge. That's what we're looking for, okay? Keep it simple, surge, rest, surge. That's the way to think of it as you look at it playing out in the market. So, and we're just building on one of the things we looked at earlier on the euro yen, is that yes, price has been in a great trend. Price did a fabulous pullback. The pullback ended with an inside bar, but here we go, we broke out, okay? We broke that supporting trend line, and then what happened? Well, we printed a couple of inside bars, printed not one, but two inside bars. Furthermore, those inside bars were also rejection candles in the sense that they were both pin bars, they'd both tried to push higher, but could not sustain the push higher, and had closed right down on the low. So what we're seeing here is, remember, that confluence of events, right? We've got surge, rest, surge. Price breaks out, and then it forms not one, but two inside bars. And it just so happens those inside bars were pin bars, rejection candles. Confluence of events, 2, 3, 4 things coming together at one time and place that allow you to effectively take that particular trade. So even if you've traded the inside bar on the surge, okay, on the pullback, well, just remember, keep your eyes peeled, because there might be more opportunities to build a position, something we will talk about deeper down the line. And just a repeat of this example, which I think this was on the DAX on a 15-minute chart. Remember, what I was saying is that we've showed different sort of instruments, different time frames. An inside bar is an inside bar is an inside bar, and if you're in a position to be able to recognize and understand it, well, that will actually help you enormously. And we can see there, as I said, after a period of consolidation, price goes sideways, okay, price breaks out, forms an inside bar, has a little bit of a fake out to the north, but remember, we're always going to trade in a breakout in the direction of the breakout. Price has that inside bar, it surges, it rests, and then you can see for yourself, it surges again. And what actually ends it? Well, it actually ends here. That's on an inside bar. That might actually be your exit plan. Inside bar to inside bar. There might be just a little bit of a, might just be a little street smart nous there, okay, in terms of trading ideas for you to look at. And this, as on the other end of the example, this was gold on the weekly chart here, okay, and what we had was, drawing the pen, we had, the start of the year, price had actually gone sideways. It was consolidating, okay, after and rallied up. What happened is we break out of the level, okay, we break out of the particular level, and then what happens is, remember, this is a weekly chart, but not one, but two, okay, but not one, but two inside bars. We actually see price tries to fake out, okay, during that week, it comes back up, but it can't sustain it. It's a fake out, price collapses. And remember, we're looking to trade in the direction of the breakout. Surge, rest, surge. If you can even just take away those three words from this particular session, ladies and gentlemen, surge, rest, surge, that will actually help you be a fabulous trader, okay? And that's what we're looking for at inside bar. It breaks out, it consolidates, forms an inside bar, and then it gets ready to rest, and it gets ready to surge again. And we want to basically put ourselves in that position to be able to trade that. So, how do we break into these trades? Okay, when we see them, well, today for a bit of just a safe standard entry, well, what we'll be looking to do is, as I said, we look to trade the break of the inside bar in the direction that we're looking to operate, okay? In particular, that might be 2 to 10 pips, depending upon the direction, the time scale, okay, the spread that might be involved. And we'll be looking to place the stop loss on the other side of the bar, okay? All right, the stop loss would normally go on the other side of the bar. Those of you will know, we're always very keen on managing risk. You're never trading without stop loss. You're never trading without, managing risk. And what we look for, okay, is generally tend to look for a 2-to-1 reward to risk. Those of you who know me know that I kind of like to talk about asymmetric reward to risk in your trades. So, if you're going to risk $100, you want to be in a position to make 200, 300, 400, etc. It's always about asymmetric reward to risk. And, as I said, that tends to be the safe way to operate, okay? And for new traders and for traders, just getting to grips with inside bar, that is a good, solid way to do that. And very simple. Remember what I was saying. The good thing about an inside bar is its simplicity is also its strength. Inside bar is either there or it is not. And once you combine that with a confluence of events, well, then you are in a position to take some very good, strong trading signals. So, as always, with any particular setup, any particular pattern, any particular candlestick, just to always remember, no trading method is 100% accurate. Hence why it is always important that we use stop losses and risk management, and we will do pieces on that during our Monday Market Matter sessions. With inside bars, you do want to be aware of the opportunity of a false breakout, and that is why we either trade them at the end of a pullback in a trend because we're expecting the existing trend to re-exert itself, or after a very clear breakout where we look to trade in the direction of the breakout, because this is what helps minimize false breakouts for ourselves. So those two kind of like simple rules help you cut down on being caught on the wrong side of false breakouts or fake outs. And fake outs themselves, they themselves can be a trading setup, which we'll look at in one of our future sessions. So before we switch across to the charts, ladies and gentlemen, just have a quick look at the conclusions, namely that the Monday Markets webinar will be every Monday, 2 p.m. London time. And we will look to focus a little bit on news, a little bit on education, active trades, tools, and markets. Today, in terms of the education bit, we've had a little look at the inside bar, which is a simple technical setup. It can be used across all time frames and instruments. It can be used for reversals and also for continuations. It can also be used to trade breakouts, but just be aware for false breakouts. So We're getting towards the opening of the US market, so why don't we have a little look at the live market to see what we're setting up with there, okay? And we'll sort of take a particular look there and have a look at one or two inside bar setups that have particularly shown up for us. Just before we move across that, just remember the next session, okay, which will be Monday, 17th of October, 2 o'clock London time. And what we're going to talk about in terms of the education element next week is a little bit about using checklists in your trading. Checklists, they come from military aviation. I have a background in military aviation myself from many years ago, and they are enormously useful in terms of, they've developed checklists to help keep them safe. And for traders, using checklists will also help keep you safe as a trader. So be sure to join us next Monday, 2 p.m. London time, where we'll go through checklists in trading as well as looking at news and looking at the markets. So as always, we're just going to switch across the charts, but beforehand, if you wish to contact ActivTrades, maybe you've got some questions, maybe you want some feedback or some insight, you can see the contact details there. We have the English desk number, which is a London number, 0207 6500 567, or email englishdesk@activetrades.com. Maybe you've got some questions, maybe you've got some feedback, maybe you've got one or two subjects that you'd like to see us cover in the Monday Market Matters webinar series. Absolutely fine. We'd love to hear those thoughts from you and be very happy to build them into our particular sessions. So if you just bear with me a moment, what we're going to do is we're just going to switch across to the ActivTrades platforms and we'll take a look at what's going on in the markets there at the moment. Okay, so here we are, ladies and gentlemen. I hope that you can still hear me. I hope that you can see the charts. This week we are here on the ActivTrades MetaTrader 4 platform, but as weeks go by, we will look at both the MT5 platform and the ActivTrader platform. ActivTrades provide a wide range of trading platforms, and we will cover all of them in particular sessions. And we will also share some of the tools and techniques, okay, and actual plugins that are available for ActivTrades customers. But today we're going to have a little look at inside bars, and then let's have a little look at the kind of the start and the open of the US market. What do we see in store for ourselves? So I have here, this is a profile where I have, and you may be able to see at the bottom, it's US dollar, and what it really is an FX trader, just trying to understand, what are the major FX pairs doing. So I have down here on the right, I have basically the dollar index, and we'll do a piece on the dollar itself, okay, in future sessions, just looking at the dollar index, and then also against all of the major FX currency pairs. So up here, I have the dollar against the Swiss franc, I have the pound against the US dollar, down here I have the dollar against the Japanese yen, I have the euro against the US dollar, the dollar against the Canadian dollar, here the Aussie against the US dollar on the weekly chart, and the Kiwi dollar on the Kiwi dollar against the US dollar. So there, in one quick screenshot, I have a very quick way to see all of the major currencies trading against the US dollar. And of course, if you're trading FX, you want to know and understand what that particularly is. So what I actually particularly have here, I'm just going to very quickly go through. I always like to start with the dollar index in terms of my particular trades here, and have a particular quick look at what we see there in terms of the dollar index. Because, as I said, if you're trading FX, you want to understand what the US dollar's doing. The US dollar, you can call it whatever you want, the big daddy, the silverback gorilla, okay, the numero uno, whatever, however you wish to label it, ladies and gentlemen, please feel free. You're very welcome to. But what we're interested in looking at is just to see, well, okay, what is the dollar doing? Because if we have an understanding of whether there's a trend in the dollar, that will also have an implication upon our trades against the other particular charts and elements. And we can see here, this is the weekly chart, and it has been very, very clear, and a very, very clear uptrend there, okay, for pretty much most of the last year. And I'm sure if you've been following the news, you'll be mighty aware of that. What I'm interested in here at the moment, I'm just going to bring up the drawing tool here because it's going to knock on here, is that actually price the week before last rallied very strongly. What did it print there? It printed an inside bar, okay? Remember what I said, if you're going to use an inside bar as a reversal pattern, it should be as part of a confluence of events. It wasn't really a confluence of events there, but then the next candle was an outside bar. So actually we had a price action combination there. That in itself is a very useful indicator, which we'll talk about in a future session. Price basically fell back here to the 20 period moving average. And then what we actually had here was we had an inside bar there. Price fell back, inside bar, and then what we can see is price has basically rallied up since then. Okay, that's what effectively people are looking at. So they inside bars, they will show everywhere, okay, on all time frames, all instruments. Once you do a little bit of practice of just recognizing them, you're in a position to sort of trade them and see how they particularly show up, and they can be very useful, and that can be useful information for us to understand ourselves. If we look at a couple of other ideas whilst we're here, just examples of looking here at the dollar against the Japanese yen. I'm just going to zoom out a little bit here, because we can see that invariably, bang, this is the monthly chart. Okay, it's the monthly chart of the dollar against the Japanese yen, and we can see from having been in this kind of big structure that we were building over years, over the last 2 years, we can see that the dollar against the Japanese yen has effectively just absolutely been rallying there on a storm. And remember, this is the monthly chart. But if I zoom in just a little bit, what we can see, okay, and what I can hopefully help with is just give you indications of what we see, namely that you might see how I've drawn in what I would call a strike zone, where I would see a demand zone here, okay, for want of a better word. But actually what happened is, let me just zoom in, is that price broke through that demand zone. Price broke through, it broke out, and then what did it do? It printed an inside bar, okay? It breaks out, prints an inside bar, and then what do we do on a true breakout? We look to trade in the direction of the trend, and that was giving us an indication on the monthly chart that price was likely to continue in its uptrend, and that is what we have seen. And you can see there has been some quite considerable move, hasn't it, ladies and gentlemen? That's been really quite some strong, bold move there. And if I look at the weekly chart, go down to the weekly chart, we can see that it did that and it moved. And then what actually happened, for those of you just interested even more, on the weekly chart, price rallied strongly again. It pulled back. Okay, what happens here is price pulls back, and what does it print here? Well, it prints a rejection candle because there's a wick beneath it. But what is it also? It is also an inside bar. It is also, it's also a small inside bar. And then what we see is that price accelerates away again. We've had surge, rest, surge. That's what we've been looking at there. Again, that's what we're looking to do. Surge, rest, surge. So there was one on the monthly chart. You can see there's one there on the weekly chart there is actually helping you there. That actually you could look at and work with as it's particularly run. And we can see, if you can just look at the daily chart, that basically price had run very, very strongly indeed. If we look at the pound against the pound against the US dollar here, we can see that price has been in quite a downtrend all year, and that has been a reflection of British pound sterling weakness and US dollar strength. And you will learn with me that that's one of the ways I like to trade FX markets. I like to buy strength and sell weakness. I like to surf the most strongest wave. That's what I've found has worked best for me. And if I look here, okay, as I said, this has been a very clear downtrend for us. But as always, there have been opportunities here on the weekly chart. You can see price is in a very clear downtrend. There's a surge. What does it do? Price pulls back. It forms a bit of a flag pattern. What ends the flag pattern? What ends the flag pattern is a small inside bar at a moving average as a part of a pullback in what is already a very clear downtrend. And then we start to see price push. Price moves down, and it moves down for what's that? 1, 2, 3, 4, 5, 6 for about the next 6 weeks. And then what happens is price pulls back again. We've had a surge, we rest. What ends the rest? The end of the rest is a small inside bar, which is also a rejection candle. And then what do we see is that we actually see price accelerate down again. So there on the weekly chart, two examples. And very often what I talk about to new traders is that, on the weekly chart, this can be a very simple way for you to trade. I appreciate that lots of people would like to trade all day, every day, but because of their lifestyle commitments, they're not in a position to be able to do that. Okay, they have, you have maybe day jobs, you have family, okay, you have other commitments. So actually the weekly chart is something that could actually be a very useful trading tool for those people who lead very, very busy lives, because for just the sake of a little bit of time at the weekend, an hour or two's time, you can analyze your markets, identify these setups, and identify these setups in good time. It's not like if you're trading on a 1 minute chart where you have to basically be really very, very quick and very sharp and very on top of your game. When you're looking at a weekly chart, you can just do that and set it up. Now, it might only be, as you said, in the pound against dollar there, it's only given you sort of 2 trades this year, but those are 2 very, very good, healthy, profitable trades. You do that, multiply that over, the majority of FX pairs and some indices and some commodities, well, suddenly you start to get quite a few nice examples, and those examples are what allow you to basically engage with markets in a let's say in a less pressured way. So that might be just a good starting point. Start to look at weekly charts, okay, at the weekend, just looking for inside bars, pullbacks and trends, and see how you could operate with that to help you with your particular trading. And finally, let's have a little look, before we look at the American markets, let's have a little look at the euro dollar here. And what we've got here is the euro dollar on the daily chart. So remember what we're saying about this charts is that I have very simple setups. I have a blue 20 period moving average, a red 50 period moving average, a green 200 period moving average. That's what particularly looking here. Hopefully you can see that this has been quite a clear downtrend. It's a reflection of the euro weakness and the US dollar strength. And those of you who've joined me for my own sessions over the last year will have been, heard me going on about that, repeatedly. Okay, the dollar was the strong boy, and you really wouldn't want to be fighting that, and euro was weak. But even within here, just over the last couple of months, there's been a couple of opportunities on the daily chart, which I wanted to draw your attention to, is that we broke through here. Let me just bring up my drawing tool again. Is that price was in a very, very clear downtrend. Very clear downtrend, okay? It surges, it rests, it surges, it rests, okay? It pulls back. And, we had another pullback here, pulling back there, okay? Where did we pull? We pulled back to, we had broken through a level of what was supply, but actually also we broke back here. We pulled back to the 50 period moving average. And what did we print here? Well, we printed a small inside bar at the end of a pullback at the 50 period moving average. That is an opportunity for us to basically, the rest is over. We want to surge, don't we? And we can see is that basically price surged again. Surge, rest, surge. And then we did it again. Price moved down, price pulled back, okay, here. What happened is, look at this number here. We pulled back to parity here, pulled back to the main number. What happened here? We pull back to the big number, big round number of parity, which is also where the 50 period moving average is. And then what happens is we print an inside bar. And it's quite a big inside bar, and personally, I prefer a smaller inside bar, okay, where possible. But, what you want and what you get from the market can sometimes be 2 very different things. Part of it is just been recognizing the sentiment of what is occurring. We've had a surge, we've pulled back, we're having a rest, and now we're getting ready to surge again. And we can see that basically price over the last few days has continued south because we want to be trading in the direction of the trend at the end of the pullback. Remember what I was saying, confluence of events. An inside bar is great, but it becomes more powerful when it's 2, 3, 4 things all coming together at one time and place. That is actually what we like to see. That is the kind of the ideal, all right? That, this, as I said, we can trade them as reversals, you can trade them as breakouts, but generally, I like to sort of trade them as continuations, as part of a pullback in a very strong existing trend, where the pullback comes back into, as I said, a confluence of events. 2, 3, 4 things coming together one time and place. It's going to give me the indication that the higher probability of travel is, in this particular case, continue to the downside. That is the way I want to do it. I want to think of myself like a surfer. I want to be surfing the wave. I don't particularly have any desire to fight the market, okay? Where I want to surf with the market, and that's what we're particularly looking to try and do. So I hope that's giving you a few examples, okay, just a few ideas and stuff of actually how we can utilize this, and how basically we can look at it on across all sort of timeframes, instruments. We'll have a particular little look. Why don't we go across and have a little look at some of the indexes, and just for the last couple of minutes see how those are starting to, the American indices are starting to wake up and show. Okay, so I'll just switch across to here and upload. As I said, as we go through the particular sessions over the weeks, we'll be looking at MT4, MT5, ActivTrader, utilizing, as I said, all variations of them. Some fantastic platforms that you can utilize there with ActivTrades, also lots of tools and plugins which we'll be basically sharing with you as we go through session by session on our own particular ways. So one of the reasons I wanted to share the sort of indexes with you here is that let me just bring up I'll bring up a bit of crude here. I think is this the one? Yeah, excellent. So what I want to be able to show is this is the chart of the Dow. Okay, this is the chart, it's the daily chart. Hopefully you can see that. Here we go, bring up the pen. Hopefully you can see that price has been in a pretty strong downtrend there. Okay, it surged, it rested, it surged. And what actually happened last week is, we had a pullback. Okay, we had a pullback to the 20 period moving average. And then what did we print? We printed an inside bar. Okay, a small inside bar, daily inside bar at the big round number of 30,000, which was also a level of support, which we turned into resistance, and price basically has drifted down since then. Okay, it's just, as I said, just practice, understanding, looking to identify, okay, where inside bars are, but also where do they appear, the context within which it appears. That can be enormously helpful for us. Okay, enormously helpful as a way and a means to basically sort of just identify our trading opportunities. It actually also did the same on the S&P 500 here. Pretty much exactly the same. Here we go, exactly the same maneuvers, right? Okay, price is moving down, surge and rest. It pulls back up towards the 20, and then what does it do? It prints a small inside bar before actually price drops down to the kind of this significant low, which was the early of the summer low where we find ourselves today. So as I said, just practice identifying. You'll find that actually even there are plugins, okay, for certain of the trading platforms that will even just look at identifying inside bars for you, because they're very simple. Remember what I was saying, their simplicity is their strength, ladies and gentlemen. Their simplicity is their strength. Nothing is perfect. There is no perfection in trading. If anyone ever tries to tell you that, they're talking nonsense. Okay, what it is about having simple concepts, simple trade ideas, simple setups that you can see and utilize across all time frames and all instruments that allow you to make good, confident trading choices. So just clear these down, have a little look there. So if I go down to the sort of shorter time frames here, I'm just going to basically put them on here, okay, to see what how we can do. And we can see that the American market is opening, and the American market isn't terribly happy. Okay, for the first thing we can see here on the Dow, let's just bring in the Dow itself. Okay, is bang. We can see on the Dow itself, as it's open today, okay, it's dropping, it's back down there. We can see that also on the Nasdaq, also on the S&P, and also on the Russell there. Okay, all of that's telling you that those markets aren't particularly happy. We've had a little bit of a risk-off environment there this morning, I would suggest, based upon we saw some of those rocket attacks in Kiev this morning. That will all get people a little bit jittery, a little bit worried. Okay, and that will, of course, that fear will carry through based upon the selling that we saw on Friday, and then of course, as I said, the rocket attacks in Ukraine this morning, and people wondering whether they're rather than the de-escalation that people wanted, whether we have the escalation itself. So we can see that, and what we will do in future sessions is we'll actually, we'll do one or two sessions just specifically looking at the kind of intraday, okay, on the US markets as they open there, what we can learn, what we can utilize, how we can do that. But even my trained eye here, just very quickly, if I just bear with me a moment, what I can sort of see here when I just look at this particular chart here is that the S&P 500 it popped up here just as it was running into its entry. And then what does it do? It prints a small inside bar rejection candle, okay, before it absolutely drops. Now, I don't suggest trading, as I said, in front of the market opening, but as a way and a means to start to understand, okay, see the price action. And so once you practice to at a level where you have that kind of cognitive recognition to be able to see those setups appear again and again and again, that can be enormously helpful for you. So we'll just for a minute or two. This is oil on the daily chart, okay? Looking at how that particularly operated, and here is an example. As I said, bang. What we actually had was the price had accelerated in a downtrend, but actually what started to stop it was we had an inside bar at a previous level of support. Now, for many people, that might not have been enough to trade, but then the next day, okay, is quite a strong domino candle, and we saw a very big move off there. So as I said, inside bars, they show up everywhere. Okay, they show up everywhere. They show up on all time frames, all instruments. And as I said, just practice identifying them, practice what actually happens up there. Were there fake outs? Was the fake out itself a great trading opportunity? Because sometimes, as we will go in a future session, that in itself can be enormously helpful. Okay, enormously helpful in the way to operate. Okay, and also give you a little bit of a trading opportunity there of its own. So there you go, ladies and gentlemen. We will draw to a close there for this week's session on Monday Market Matters. I hope that you've found that useful. I hope that's given you some insight into the news that we've coming on. That we've actually had some strong education elements there based on utilizing the inside bar, and also just looking at examples of how that sets up, but also just seeing how they set up there in live markets, how you can actually see them across time frames, across different instruments, and how it basically sets up and works with us. I hope you found that useful. As always, I wish you the very best of success in your own trading endeavors, ladies and gentlemen. I hope that you'll join us again, and I look forward to seeing you on next week's session of Monday Market Matters. And until such time, trade well, everybody. Many thanks.